Hello guys, hi, how are you all? I hope you guys have seen the part 1 to this video, that is solution to question number 1 and 2 of our June 2022 examination solution discussion. This is part 2 wherein I'll be discussing solution to question number 3 and 4. Next up we'll have solution to question number 5 and 6 coming up in tomorrow's video. Let's get going and then start with the solution discussion for question number 3. But before that, here is an announcement for the November 2022 attempt, which is now going to happen in the month of December 2022. Step Up with Yashas is a new batch, 100% comprehensive coverage in English. Yeah, you can take up an Academy Plus or Iconic subscription to join us in this journey of CA Foundation. We know the advantages of Plus subscription, that is that we get live interactive classes, recorded classes backup available. With one subscription, you can avail access to all the educators' notes and all the educators' PDFs. You get detailed notes and you get to be part of an academy community and quite a lot more. But if you take up Iconic subscription, over and above all of this, you get hard copy of the material at your doorstep. You get doubt solving feature, you get one-to-one live mentoring and lot more. So what are you waiting for? Take up your Unacademy subscription today by using the code YESHAS, which is YESHAS. Avail 10% discount on the price that you see and join us in this journey of CA Foundation. Great. So that's the news, and let's now head on to our solution discussion. So we've done question number 1 and 2 in the previous video. It's there in the same YouTube channel. You guys can go back and then see. And now we'll do question number 3 and 4. Very interesting question. Question number 3 is on consignment, and question number 3b is on goods sent on return or approval. 3c is on average due date account current. Yeah, account current, and then we have one on computation of goodwill, and then question number 4 runs into NPO, followed by 4b on partnership. Oh god, lot of topics will get revised in this video. Let's get started with the first one. Consignment question. M of Mumbai sent on consignment goods valued 4 lakh to A of Agra on 1st of March 2020. So M of Mumbai is the consignor, A of Agra is the consignee. So 4 lakh is the value of the goods sent. 48,000 is the expense incurred on freight and insurance. This 48,000 is consignor's expense, which is direct in nature. Then M's accounting year closed on 31st of December. So we're going to do accounting as on 31st of December. Remember that. 48,000 freight and this one goods valued 4 lakh. Mr. A is entitled to commission of 5% on gross sales plus del creditor commission of 3%. So del creditor commission is paid by consignor to consignee. Because consignee is entitled to del creditor commission, bad debts, if any, arising is to be borne by consignee. Consignor will not bear it. That will get deducted from the consignee's commission. Got that? Very good. And del creditor commission should be applied on total sales, never ever on credit sales exclusively, unless such amount or such a statement is specifically mentioned in the question. Note this. A took delivery of the consignment by incurring rupees 12,000 for the goods consigned. Wow, 12,000 rupees is incurred by Mr. A for taking delivery. So this 12,000 rupees is non-selling expense. This 12,000 rupees will be non-selling expense incurred by Mr. A. Very good. Then on 31st of December 2020, A informed on phone that he had sold all the goods for rupees 6 lakh by incurring selling expense of rupees 8,000. So how much is the selling expense incurred? 8,000. This 8,000 will not constitute part of our closing stock valuation. Only that previous amount will be part of our closing stock valuation. Got that? He further informed that but that closing stock, this selling non-selling bifurcation would be of no importance. You know why? All the goods are sold, guys. All the goods are sold. If only part of the goods were sold, then closing stock computation would have come. Selling expenses, non-inclusion, non-selling expenses, inclusion, all of those tricks would have come. The problem has become easy now. Fine. Can't tell. Let's go ahead. So he has sold all the goods. There is 8,000 of selling expense incurred. 5,90,000 has been realized and the rest has been considered irrecoverable. Balance amount is considered irrecoverable. Not our headache as consignor. Consignee should only pay this. Okay. Then amount will be sent along with the account sales. 5th of January. This is after the end of accounting period. Subsequent year this is happening. M received the check for amount due from A, incurred bank charges of 1,040 for collecting the check. This 1,040 expense is incurred in January, that is next year. We are accounting for 2020. However, in 2020, when we prepare consignment account for Mr. M, we can make provision for this collection charges 1,040. You guys get that? We can make provision for this collection charges rupees 1040. Great. The amount was credited by the bank on 9th of January 2021. So this is in the subsequent year. Write up consignment account, finding out the profit or loss on the consignment and A's account in the books of M. Great. I hope people understood till here. Now let's quickly start with the question. So they want us to prepare consignment account and consignees account. Consignees A. So in the consignment account, at first we'll write goods sent on consignment 4 lakh. Yeah, goods sent on consignment 4 lakh. Let me change the color to yellow. 4 lakh rupees goods sent on consignment. Then what's happening? 48,000 expense incurred by consigner. So entry is consignment account debit to cash or bank. It's not paid by consignor. So it is paid by consigner. So I'll write consignment account debit to cash account 48,000. This is expense incurred by consigner for freight and insurance 48,000. Got that? Then what do we have? We have the next part coming in which tells like M's accounting year close on 31st December. M is entitled to a commission of 5% plus 3% del credit commission. After we write sales, we'll write this commission. Till then we don't know. A took delivery and incurred 12,000 rupees. 12,000 expense incurred by A, consignee. Accounting entry will be consignment account debit to A account. That is consignee account. So I'll write consignment account debit to A's account. That is consignee's expense for taking delivery. Non-selling expense incurred 12,000. The same should appear in the consignee account. So already in A consignee's account on the credit by consignment account, consignee's expenses, delivery, non-selling expense 12,000. Got that? Then what do we have? He has sold all the goods for rupees 6 lakh. So 6 lakh is the sale value of the goods. So 6 lakh will become sales for which we have to receive money from our consignee. The entry will be consignee account debit to consignment or A account debit to consignment. So in my consignment account on the credit, I'll write by A's account or consignment sales 6 lakh. By A's account or consignment sales 6 lakh. So after I write this on the credit of my consignment account, in my consignee's account, I'll write on the debit saying that the money is supposed to be received. Consignment account 6 lakh. In my A's consignee's account, I'll write to consignment account 6 lakh rupees. Got this, everyone? Great. Then what do we have after that? He further informed that only 5,92,000 had been realized and rest was considered irrecoverable. That we don't care. He would be sending a check in a day or so. That later he sent it on 5th of January. We will write it in the subsequent year. But what we need to write in the current year is this 1040 rupees collecting charges are there. It is though incurred in the next year, we are expecting it to incur it in the current year. Provision to banta hai. So in my provision, in my consignment account on the debit, I'll create provision 1040. And now we know the sales 6 lakh. I can also make commission entry to A's account. The entry is consignment account debit to A because we need to pay A. A is a liability credit. Consignment debit because it is expense. Consignment account debit to A. So I'll write to A's account commission, normal and del creditor 5%. Normal commission 3%. Del creditor commission total 30,000 plus 18,000, 48,000. And they've told that selling expenses of 8,000 is incurred. All the expenses have to be debited to consignment account. So I'm debiting here. Credit is to credit is to consignee account because we need to pay such money to consignee. So in my consignee account, I would credit two things. One, selling expenses what I need to pay him 8,000. Two, commission that I need to pay him normal as well as del credit 30 plus 18, 48,000. Got this, guys? Fantastic. And the question is over. So we have everything else in our consignment account. This 20,000 is total. We will find our profit on consignment 82,960 as balance. And how much money should we collect from our consignee? 6 lakh rupees towards sale. Out of that is expense of 20 and 48,000 commission will be deducted. He has to pay us 5 lakh 32. He would pay entire 5 lakh 32. Bad debts is not allowed as a deduction. So 5 lakh 32 will become opening balance in the subsequent year and he'll give us a check in the subsequent year 5th of January. This is a very simple, sweet, straightforward question on consignment. No abnormal loss, no load, no computation of closing stock also. This is one of the easiest question you can expect on the topic of consignment. Yeah. I'll show this to you for a moment so that you can see and enjoy. Then we'll do 3B. I hope you guys understood this. Like I've been mentioning, if you have any doubt at any point of time, all you can do is easily reach out and tell me your doubt, and I'll be there to help you people. Great. So by this we are done with our question number 3A. Let us now do question number 3B, shall we? Let's go to question 3B. 10 marks, guys. This is a loot question, let me tell you. 3B is on goods sent on return or approval basis. Let's read it. P sends out goods on approval to few customers and includes the same in sales account. Okay. So this guy has the habit of writing sales entry when the goods are sent, not when the goods are accepted. So whenever he sends the goods on return or approval basis, no, at the same point he'll write the sales journal entry. He'll write trade receivable account debit to sales or debtor account debit to sales or that party account debit to sales. He's written the entries. Okay. On 31st of March 2021, the trade receivables balance stood at 3 lakh. So 3 lakh rupees is the amount receivable, which included 21,000 goods sent on approval against which no intimation was received during the year. So 21,000 worth of goods, we have sent it on return or approval basis, but those people to whom we've sent, they have not accepted it. They have not at all accepted these goods. So we'd have to reverse the sale entry. If we, in case we had not passed the sale entry, we would have not reversed, but we have passed the sale entry when we sent the goods, even before they accepted. So against 21,000, we have to reverse. So the journal entry for reversal will be sales account debit to trade receivables, or you can write the names of the party if it's available. Is it available? See, no intimation was received during the year. These goods are sent out at 25% over. This will be later. There are two entries that you need to pass at the end of the year for goods sent on return or approval basis. Entry number 1, reversal of the sale entry. Entry number 2, inclusion of such stock in closing stock entry. When we include such stock in the closing stock, then we need to write the entry at cost price after eliminating the profit element in such stock. Let me repeat. We need to write the entry at the cost price after eliminating the profit on such stock. Got it, guys? Great. And were sent to Mr. A 12,000 and Mr. B 9,000. So Mr. A 12,000, Mr. B 9,000, total 21,000 will reverse. So either our entry can be sales account debit to trade receivables or debtors 21, or our entry can be sales account debit to Mr. A 12 to Mr. B 9. Let's have a look. See, you can either write sales account debit to trade receivables, or you can choose to write in detail. You can write sales account debit to A account to B account. You can write sales account debit to A account to B account. Either ways, you will fulfill the answer. So 21,000 is the total amount, 12 for A and 9 for B. Great. Then let's go to next one. So what's happening with the later part? We need to include that in our stock. How do we include that in our stock? Or why do we include that in our stock? That inventory belongs to us, but it is there with our customer. When we physically count the inventory in our godown, we might not count that because it's not there with us. But does it belong to us? Yes, it does belong to us. You get it? So we need to include in our inventory, though it's not physically available with us. But such inclusion should happen at cost. Such inclusion should happen at cost. Great. 25% over and above cost price. So it is 1 by 4 on cost. So on selling price, it is 1 by 5 because you should be knowing this. You are over your X on cost. On sale, you are over your X, but your X is with some 1. You remember? Great. 1 by X plus 1. That's how it works. Okay. So let's remove the load. How much is the load? It is like this, 1 by X plus 1. Yeah, we've done working note number 1 to understand this. See this. So if the cost is 100, profit is 25, this is 125. The selling price is 12 for Mr. A. Then you would have to do 12,000 into 100 divided by 125. Yeah. इतने में इतना तो इतने में कितना. If it is this much for this much, then how much for this much? You get that? Or you can say ಇಷ್ಟಕ್ಕೆ ಇಷ್ಟಾದರೆ ಇಷ್ಟಕ್ಕೆ ಎಷ್ಟು ಇಂತಕ್ಕೆ ಇಂತ ಇದೆ ಇಂತಕ್ಕೆ ಎಂತ. We're finding this. Or I can tell you in Tamil also. ಇವಳಕ್ಕೆ ಇವಳೋನ ಇವಳಕ್ಕೆ ಎವಳೋ ಈತಕ್ಕೆ ಈತಾಂಡ ಈತಕ್ಕೆ ಏತತು ಕೊಂಕಣಿ ವೇಣು ಕೊಂಕಣಿ also I can tell. ಅಕ್ಕ ಕಿತ್ಲ ಜಲರ್ಥಕ ಕಿತ್ಲೆ. See, so we do 12,000 into 100 divided by 125, get 9,600. So the stock that's lying with Mr. A, the cost of it is 9,600, and the stock that's lying with Mr. B is 9,000. For that, the cost is 7,200. Got that? So if you want, you can take the total 16,800 or individually 9,600 and 7,200. So much our closing stock will increase. So stock account will be debited. Credit will be given to stock with customer account, or you can write what to say to trading account also. That also will work. So the entry will be stock with customer account debit to trading 16,800 16,800, or you can write individually A B 9,600 9,600, stock with A, stock with B 9,600 7,200 to 16,800. This is the entry. Then what's happening? Mr. A sent intimation of acceptance. Hey, Mr. A accepted, but when? 30th of April. Our year end is 31st of March. So on 31st of March, we have to reverse. Next year, May, beginning date, he has accepted. When has he accepted? In the subsequent year, end of the month, end of the first month, he has accepted how much? Entire goods. So when he accepts, then we have to freshly write the sale entry. You know why? Previously, whatever sale entry we had written, no, we've reversed it. So right now we need to freshly write a sales entry. Let us write a fresh sale entry for A. Either A account debit to sales or trade receivable account debit to sales. See, the fresh entry will be trade receivable account debit to sales or A account debit to sales. Yeah. Then Mr. B returned the goods. For returning, there is no separate entry required because we have already reversed the entry for return that has to be made by him or can be made by him. Done. So they asked make the adjustment entries. We just saw that. Show how this will appear in balance sheet. Simple. Our debtors is 3 lakh. In that 3 lakh, we'll eliminate 21,000. See, as on that date when we prepare balance sheet, it will look like this. 3 lakh rupees is total trade receivables. But A and B, 21,000, we might not receive because they have an option to return goods. I'll reverse it. And if I deduct 21,000 of debtors, that means that 21,000 stock belongs to me at cost though. I'll include in my stock. So stock with inventory with us 1,80,000. That's given in the question. Somewhere here only given. Yeah, 1,80,000. To that, I'll separately add that stock which is there with our customer. 16,800, bringing our total stock to 1,96,800 rupees. Got that, guys? Fantastic. So this is how we prepare balance sheet extract after considering goods sent on return on approval. I hope all of you understood this. Have you guys? Chalo, let's quickly go to the next part. So we're done with 3A, 3B. Let's see 3C. 3C may have option. Either you can attempt the first part or the second part. Let's see one after the other. Let's see the first part now. The following particulars are sent by Mr. A to Mr. K. Nice. Let us read the table later. Please read what's given below table. Prepare an account current. Where is the line? Okay. Prepare an account current as sent by Mr. A to Mr. K as on 31st of October 2021. So what should we do? It is to be sent by Mr. A to Mr. K as on 31st of October 2021. So let's prepare this account current. And when we prepare this account current, what we need to keep in our mind is who is the sender, who is the receiver. You remember, I told you how to remember the name of the account current. It is receiver in account current with sender. Your friend's name first, followed by your signature. Or A, B, C, D, E, F, G, H, I, J, K, L, M, N, O, P, L, M, N, O, P, Q, R, S, T, R, S. It is R first, S next, if you remember the alphabets. R for receiver, S for sender. When you write the name of the account current, you need to write receiver's name first, then the sender's name. Receiver in account current with sender. So what is it? Receiver in account current with sender. Fantastic. So remember this, that we need to write receiver in account current with sender. So this is being sent, no? That person's perspective we should use. Now in this case, sent by A to K. So the name of the account current should be Mr. K in account current with Mr. A. Mr. K in account current with Mr. A. And this is done in the books of Mr. K. So what should we do? In the books of Mr. K. In the books of Mr. K. Mr. A in accounts, sorry, in the books of Mr. A. In the books of Mr. A. Mr. K in account current with A. Karan, Arjun. Yeah, in the books of Arjun. Karan in account current with Arjun. As on 31st of October 2021 by product method. Product method is the easiest to do. It will take lesser time. Instead of computing individual interest, no. Write the amounts, write the period. Product. Total product may balance and figure you find. Opposite side you find interest. This could have been way more tricky. They could have asked epoch method. But they could have asked balance of product method. But lucky you, they asked product method without epoch. Fine. Let's first draw an account in the books of A for Mr. K. So that's how you should start with. So in the books of Mr. A, Mr. K in account current with Mr. A. So first transaction, balance due from Mr. K. We are A. Who are we? A. From K we are supposed to receive money. Asset, balance sheet, debit side. I want to say account, debit side. So we'll write on the debit here 6,000. First fill up all the amount columns. Leave space for period and product. Later you do period and product. Don't do it initially. So write the date 15th of July 6,000. Then what do we have? Sold goods to Mr. K. You have sold goods to K. So when you A sell goods to K, amount receivable from K will further increase. So the journal entry is K account debit to sales. So this is like K account. So I'll write here to sales 10,000. Got that? Then what do we have? Goods returned by Mr. K. K has returned goods. So if you wouldn't have returned goods, you were supposed to pay us money. So amount receivable from K will reduce. Debtors balance will reduce. This has to come on the credit side. In another way, it is sales return. Journal entry is sales return account debit to K. This is like K account. So I'll write on the credit by sales return 1600. Got it? Then what do we have? Check paid by Mr. K 6400. Check paid by Mr. K 6400. So Mr. K has given us a check. We have received the check. So we'll write bank account debit to K. This is like K account. So here I'll write by bank 6400. Got it? What do we have after that? 20th of October 2021. Cash received. Cash received from K 4000. When we receive cash from K 4000, what is the entry that we should write? Cash account debit to K. So this is like our K account. So here I'll write by cash account 4000. I hope you all got this. Then that's it. All the transactions are done. So next we'll find period. How do we find period? From the date of transaction to the date of account current. Account current is prepared on 31st of October. But important thing is from 15th of July when you count now, count that 15th of July also. However, for the other dates when you do, you would count it from the next day. You would count it from the next day. I hope you got this. Sure guys. Yo, okay, here we'll write 109 days. That is from 15th of July to 31st of October, including 15th of July. From 20th of August to 31st of October is August may 2 days, September may 30 days, 31 days in October. It comes to 72. Similarly, from 25th of August, if you see, August may remaining 6, September may 30, October may 31. 61 days. And if you see is 15th of September, say when you count, 15 days in September, 31 days in October. Then from 20th of October when you count, 11 days in October. That's all we have. Then we'll find the product. 6,000 into 109 is 6,54,000. 10,000 into 72 is 7,20,000. 1,600 into 67 is 1,07,200. 6,400 into 46 is 2,94,400. 4,000 into 11 is 44,000. After writing this, we'll find balancing figure in the product column, which comes to 9,28,400. On this 9,28,400, I'll find the interest on the opposite side. On 9,28,400. It's here, small mistake. Yeah, 9,28,400 into 1 by 365 into the interest rate. Why do we do 1 by 365? We know interest is computed as P into T into R. We did P into T. T, if you do only into 109 and then into do 8%, it will become interest for 109 years. It is 109 days. So 109 days, if you have to write in terms of years, we need to write 109 by 365. 72 days in terms of years is 72 by 365. So instead of doing here 109 divided by 365, 72 divided by 365, 80, 67 divided by 365, what will we do? We'll find total product and once for all we'll divide by 365. That's what we did. And the interest comes to 202. After I write interest of 202 in the amount column, then I'll find my balancing figure in the amount column. That is 4202. I hope you all understood now as to how should we be doing account current. Yeah, and that's it. Mr. K owes Mr. A rupees 4202 as on 31st of October 2021. This is the solution to question number 3C. I hope you understood. Like I mentioned before, any doubts, smallest of the smallest doubts, please reach out. I'll be more than happy to help you people. So can we go to 3C2? Let's go to 3C2. What's there in 3C2? Mr. X gives the following particulars in respect of business carried on by him. Capital invested in business is 9 lakh. Okay. Market rate of interest is 8%. Risk rate of return is 3%. So normal rate will be 11. 8 plus 3. Normal rate of return will be 11%. Remuneration per annum from alternative employment, opportunity cost. This has to be deducted from each year's profit. Why? Even if you wouldn't have done business, so much of money you would have earned. So this is not our profit. This is salary expense to the proprietor. Treat it like an expense which is not charged. 36,000. So there are two ways of handling this 36,000. When we want to find the adjusted average profit, each individual year's profit is there. From that deduct 36, 36, 36, 36, 36. Take the adjusted profit and then find the average. First method. Second method, total the profits before adjusting 36. Take the average, that is by dividing by number of years. Then deduct 36 only once. There are two options. What I just mentioned is, you can deduct this 36,000 remuneration from each of the years first. Then take the adjusted profits and after that find the average. Or first find the average and then deduct that, what do you say, remuneration once for all. Do you get that? So that is the possibility. Now they have given profits for the previous years 2 lakh 40. Oh, wait one second. My mouse has stopped working. It started. Something happened. This system is being used to the core today. Shabash beta, shabash. Super hot it is. If I put dosa batter on this, dosa will come. I recorded a lot of videos for CA intermediate, advanced accounting liquidation chapter, and I did a little bit of office work. I did a little bit of scheduling. Oh my god, since yesterday and day before this laptop is running about 18 hours, 19 hours. Last 12 hours it's running straight. Oh, okay. Fine. Business earned profits of 2 lakh 40, 2 lakh 16, 3 lakh in the last 3 years. So I'll do 2 lakh 40, 2 lakh 16, 3 lakh. Deduct that remuneration, that is adjust that, identify average profit, and then I'll find normal profit. How do I find normal profit? Capital employed multiplied by that 11%. That will be our normal profit. So difference will be super profit because they've asked us to compute goodwill on the basis of 6 years purchase of super profit. So simple guys, goodwill is super profit multiplied by 6 years. Super profit is adjusted average profit minus normal profit. Adjusted average profit is that 3 years average after adjusting that 36,000. And normal profit is amount invested minus normal rate of return. So let's start with this. First I'll identify my adjusted average profit, because see, in order to find goodwill, I'll tell you how it works. See, I need to find goodwill, which is super profit multiplied by number of years purchase. But we don't know super profit. Then I'll write working note number 1 for super profit. Super profit is adjusted average profit multiplied by normal profit. Then I don't know adjusted average profit. That will bring me to working note number 2. 3 years, 4 years, we know profits are 2 lakh 40, 2 lakh 16 minus 36 and 3 lakh. I'll adjust 36,000 remuneration to proprietor in all the years. Then I'll get adjusted profit 2 lakh 4, 1 lakh 80 minus 72 and 2 lakh 64. Total of the adjusted profits comes to 5 lakh 76. This I'll divide by number of years, that is 4,000. I'll get adjusted average profit of 1 lakh 44,000. This can be found in a different way. That is, for all the years 19, 19, 20, 21, I'll write 2 lakh 40, 2 lakh 16 minus 36 and 3 lakh. Total will be 7 lakh 20. I'll find number of years average for 1 lakh 80,000. From this, once for all, I'll deduct the remuneration 36,000. I'll get adjusted average profit of 1 lakh 44. It's the same. Method is different. So, super profit is, we know adjusted average profit of 1 lakh 44. But we don't know normal profit. For that, we should go to working note number 3. Oh God, sir. Yeah. Working note number 3, normal profit. How do we find normal profit? Capital employed multiplied by normal rate of return. How much is capital employed? 9 lakh. Normal rate of return? 8 plus 3, 11%. So normal profit is 99,000. How much is normal profit? Sorry, 99,000. 9 lakh into 11%. So then I'll write my adjusted average profit of 1 lakh 44,000 minus 99,000 of normal profit, which will leave me with super profit of 45,000. This 45,000, if I multiply with 6 years of purchase, I will arrive at goodwill of 2 lakh 70,000. Did you guys understand this? That's the answer to the second option that you had. So now we'll discuss question number 4. Before that, I'll leave you with this for a small brief moment so that you can understand this if you have to have a look. Got it, guys? Shall we now go to next one? I hope we can. Fantastic. Chalo. Let's go to question number 4A. This is a question on not-for-profit organization. Let's do it. Following is the receipts and payment account of Mumbai Club for the year ended 31st of March 2021. The receipts and payment account is given. What should we be doing? They have given some additional information also. Read the last line. They're asking us to prepare income and expenditure account and balance sheet. No problem. Let's prepare income and expenditure and balance sheet. Let's mark the items which has adjustment. Subscription, printing. Subscription as adjustment. Here receipts may will have subscription, donation and subscription. This as adjustment. We'll prepare working note for this. Printing payment as an adjustment. We'll prepare one working note for this printing. What else do we have? After that we have repairs. Repairs as adjustment. We'll prepare one working note for repairs. Repairs payments may. And it says prepares unpresented checks unpresented, so it will affect our bank balance also. So bank current account balance is there, that also will do some small working note. This balance would change if we do reconciliation. It will not be 20 and 60 any longer. We'll have a revised balance there. Then we have interest not yet entered in passbook, so this would again affect our interest. The receipt said you have bank interest, yeah, this would also get changed. Oh, sorry. So this item also has some adjustment, bank interest. Then what else do we have? Machinery account. They have given opening and closing. So we'll open one small machinery account. Here do we have any purchase or sale of machine? Yeah, sale of equipment. Do we have any purchase of equipment here? No, we don't have any purchase of equipment. Purchase of equipment is there for this as well. Got that? Cool people. That's it. Honorarium to secretary also there is some adjustment. We have honorarium to secretary here. Yeah, this. We'll see what is the adjustment later. I'm just marking the items which has adjustment. Groundsman salary. That also has some bonus 20,000. We need to pay him extra. Payments media groundsman fee. This. Yeah, these many adjustments we have. We've read the entire question and the place is safe for us to jump in and then solve. So let's solve. Cash in hand 20,000. We need to prepare two balance sheets, one opening, one closing. So this would become the balance in the opening balance sheet. I'll write 20,000 in my opening balance sheet asset. So this is my opening balance sheet as on 31st of March 20. I'll write cash in hand as asset 20,000. Done. So then what do we have? We have after that bank balance. Balance at bank as per passbook. Savings account 1,93,000. Closing has to be adjusted. So let us write that. Bank balance, savings account 1,93,000. We would have to figure out our working closing balance. That we'll do in working note number 5. I've already done it in detail. This Excel sheet is prepared so much in detail, guys. No doubts you will get when you see the sheet. Everything will be very clear. Yeah. Okay. Done. Then we have bank interest. How much is bank interest? Bank interest is our income. In income and expenditure, I need to write this on the credit side. That is income. How much? 5,000. This will go to inner column because there is additional 2,000. Sir, will we write right now? No, we'll write it later. So for now, I'll write this 5,000. So I'll come to income and expenditure. In my income and expenditure, I wrote bank interest 5,000 rupees in the inner column. Got it? What do we have after that? Then we have donations and subscriptions. How much? 2,50,000 rupees. 2,50,000 rupees is donations and subscriptions. We'll open a separate ledger for donations and subscriptions. There on the credit side, I'll write buy receipts and payment 2,50,000. Have a look. I'll open a separate ledger, donations and subscriptions. Subscription account. On the credit, I've written buy receipts and payment 2,50,000. Got it? On the credit in our subscription account, I've written buy receipts and payment 2,50,000. Cool, guys. What do we have after that? Then we have entrance fee. Once again, entrance fees is 18,000 rupees. This is income. In my income and expenditure, on the credit, I'll write entrance fees 18,000. In my income and expenditure, on the credit, I will write by entrance fees 18,000. Cool. Then we have contribution to club night 10,000 rupees. Contribution received income. So I'll write by contribution to club night income 10,000 in income and expenditure. Then we have sale of equipment. This is not a revenue receipt. I will not write this in my income and expenditure. I'll open one machinery and equipment account and write this there. You guys get it? So there we go. Our working note number 1, machinery and equipment account. It is a receipt. So receipts and payment account my debit side. In machinery and equipment account, credit side. I have written buy sale of equipment. How much? 8,000 rupees. Got it, everyone? What do we have after that? Buy bar room receipts. Bar room receipts 20,000. When we have bar room receipts of 20,000, this is income and it will go to income and expenditure, credit. As usual and quite obvious. So I'll write here in income and expenditure account. I'll write buy bar room receipts 20,000. Got it? Then proceeds of club night 78,000 rupees. So club night may have collected some money 78,000. That will become income. So I'll write in my income and expenditure account on the credit income 78,000 rupees as proceeds from club night. Income 78,000. Yeah. What do we have after that? Now let's go to payments. Groundsman's fee 75,000. Groundsman's fee of 75,000 is our expense. In income and expenditure, on the expense side, I'll write 75. But I would have to write this 75 in the inner column because this is item with adjustment. I put a star next to it. So in income and expenditure, on the expenditure I'll write groundsman P 75 in the inner column. Then we have purchase of equipment 1,55,000. This will increase the value of our equipment. I will write this in my equipment account, machinery and equipment account on the debit. Shall I? So chalo, let's go to our machinery and equipment account. On the debit, I'll write 1,55,000. What do you have after that? Rent of ground 25. This is payment. We have paid. So it is our expense. I'll write 25,000 in income and expenditure on the expense side. Income and expenditure में expenditure. Rent of ground. How much? 25,000. Class. Got that? What do you have after that? Club night expenses 38. Two ways. Either this can be decreased from our club night proceeds, which is written on the inner column, but you would not know no, what item income ke liye expense will be there. Then it is totally okay to write that income in the outer column, write this item on the expense side in the outer column. So I'll write it in the expense side. Club night expenses 38,000 on the expenses debit. Then we have printing and office expenses 30,000. So we have adjustment. I hope you remember. So I'll write this 30,000 there. So printing and office expenses is there, but this is item as an adjustment. So I'll do a separate adjustment. Have a look. Printing and office expenses. Yeah. Here, how much is the expense? 30. Sorry, how much is paid? 30,000. 30,000 is paid doesn't mean 30,000 is our expense. There is some outstanding. There is some prepaid. Can be. Repairs to equipment, again this item has adjustment. I cannot write this straight in my P&L or income and expenditure. I'll write it outside 50,000. So I've done a working note here. Repairs to equipment, amount paid is 50,000. Then we have honorarium to secretary 40,000. This also has adjustment, so I cannot write in income and expenditure. Moreover, they have given very clearly here. This belongs to year 1920, not 2021. So I'll write it separately. Honorarium account. I've opened honorarium to secretary account. How much is paid? 40,000 rupees is paid. Got it, guys? Then what do you have? Balance at bank. How much is the balance at bank? Balance at bank. Savings account 2,04,000. No problem. This will go to our closing balance sheet. So in our closing balance sheet, have a look here. Balance sheet as on 31st of March 2021. Bank balance, savings account 2,04,000. However, current account has an adjustment. There is that some PRS adjustment, no, unpresented 620. We'd have to adjust it. So till then we'll not write. Then we'll go to cash in hand. How much is cash in hand? 25,000. So cash in hand 25,000. So we posted all the items from receipts and payment. Now we'll go down to see the items from opening and closing balances. Subscription due is 15 and 10. 15 is the opening, 10 is the closing. So this is our asset receivable. So outstanding subscription due, opening, closing. 15, 10. 15 is opening, 10 is closing. Also goes into our subscription account. If we go to my subscription account, on the debit I'll rate opening subscription 15,000, closing subscription 10,000. Great. Then we have amount due for printing 10,000 opening outstanding, 8,000 closing outstanding. So 10,000 liability in the opening balance sheet. Have a look. 10,000 rupees outstanding for printing. Liability in the opening balance sheet. Outstanding for printing. Liability in closing balance sheet. This will also go to our printing account. See this printing and office expense account. Opening balance liability 10. Closing balance liability 8. Great. Then we have checks unpresented for payment for repairs 30,000, 25,000. So 30 and 25 we have given the check but they have not presented. You get that? So it is not a payment. I would have to decrease. Look at this adjustment. So amount paid is 50. In that 30,000 is previous years. Why? These checks were issued in the previous year. It got deducted this year. So it's not current year payment. I'll deduct 30. However, 25,000 is closing, means I have issued the checks this year. It is payment in the current year. The checks will be present in the next year by him. It will get deducted next year. So I will add 25,000. I will deduct 30,000. This is like our opening outstanding and closing outstanding adjustment. You get that? Then we have our closing repair expense to be coming down to 45,000 in that case. So let me write in my income and expenditure, repairs and repairs expenditure will become 45,000. See, this will become 45. Got it? Now our balance will change. No, bank balance. Bank balance was initially 60 opening, 20 closing. But those unpresented checks are there. If I adjust that, we are doing BRS. Will not write balances per passbook. Should write balances per cash book. I'll deduct 30,000 for unpresented checks. 30,000 will be opening bank balance current account, and closing after deducting 25,000 it will become -5. So bank balance in current account will no more be asset, it will be liability. So now see, in the closing balance sheet, we'll write bank OD on the liability side 5, and in the opening balance sheet, we'll write 30,000 on the asset side. Have a look. Yeah, see here, overdraft 5,000, and here I'll write it in the current account 30,000. Total comes to 2,23,000 here. What part of the question is pending? There is interest not entered in passbook. It is entered in cash book, no. So no need to adjust cash book balance. So 2,000 rupees is there. So what do? This will become income. Adding income and expenditure, it will become asset because it's not yet received. Have a look. Outstanding interest. Or moreover, it should not be included in our cash book because it's not yet received. So I'll write here outstanding interest 2,000. It will become income. Then it will become balance sheet mein asset. See, outstanding interest, balance sheet mein asset 2,000. Closing. So this interest income will become 5 plus 2, 7, and balance sheet may asset 2,000 rupees. Interest is also adjusted. So we have opening and closing value of equipment and machinery 80,000 and 1,75,000. Let's write that. Shall we, guys? Okay. So in our machinery and equipment account, opening balance 80,000, closing balance 1,75,000. Same would go into our balance sheet also. Have a look. Opening balance sheet में 80,000, closing balance sheet 1,75,000. Now, if we come down to our machinery and equipment account, we have opening, we have purchase, we have sale, we have closing. There is difference of 52,000. This difference is either loss on sale of equipment or depreciation. So we don't know what is it. So irrespective of whether it is loss or depreciation, it will go to income and expenditure as debit side only. So I wrote written here to depreciation or loss on sale of machinery 52,000. Then what do we have? Then we have honorarium to secretary is to be increased by 20. Last year how much have we paid? 40,000. That is for 1920. For current year will increase by 20 and it is not paid. Total amount will be liability. Have a look. I will show it. I will show it with the help of ledger also. 40 is paid for last year. So in the last year it was outstanding. This should appear in opening balance sheet. See here. Opening balance sheet mein I will write outstanding honorarium 40. And they've told current year mein it will be 20,000 more. And it's not paid. So current year mein outstanding honorarium will be 60. This will be closing balance in honorarium account. In our honorarium account, this will be closing 60. And this is existing 40 plus increase 20. Total 60,000 is current year honorarium expense. This 60,000 will go to income and expenditure account as expense. I have written it in our income and expenditure. Let me show it to you. See, income and expenditure for the current year 60,000 rupees honorarium to secretary. Great. What do we have after that? Then we have groundsman is to receive bonus of 20,000. Okay, we'll pay him 20,000 bonus. Already 75,000 was paid. Additional 20,000. Total becomes 90. This 20 is not yet paid. So it will be liability. I'll write in balance sheet as outstanding bonus to groundsman 20,000. That's it, guys. Every other item is posted in our subscription account is not closed. Okay, subscription account, machinery account closed, office equipment account not closed. Printing and office expense में balancing figure of 28,000 is our current year expense. So that will come to income and expenditure. 28,000 expense. Then only ledger left is subscription. We have opening due, closing due, received, balance and figure of 2,45,000 is current year income. Income and expenditure account, credit side. See here in my income and expenditure, buy donations and subscriptions 2,45,000. Class, close, By then all the ledgers are closed. Have a look, have a look, have a look, have a look. All the ledgers are closed. Come on, let's go close this part also now. What do we have left in here? Nothing. We'll close our income and expenditure account. Identify our surplus as balancing figure. This surplus needs to be added to the capital fund, which we don't know. This capital fund needs to be found as balancing figure in opening balance sheet. We have everything else in opening balance sheet except this 2,88,000 to be found as balancing figure. From opening balance sheet, we'll write this 2,88,000 to our closing balance sheet. We'll add that to our surplus to find 3,23,000 as closing balance sheet's capital fund, and that's the amount at which our closing balance sheet would tally. Yes, I don't know how many of you watched this throughout because it's little lengthy. It's little lengthy, but not impossible, not difficult to do. You can still solve this in the examination environment and also crack it. So that's the point. I hope you guys saw this part. Did you? Yeah. If you have any doubts, like I mentioned previously, just a message away. Just a message away. So by this, we're done with question number 4A. We are done with good 50 minutes of the lecture. I don't want to rush teaching you this topic of what to say partnership based question in the last 5-10 minutes. So I would call it a day. But in the next video, I will be solving question number 4B. Yes, I initially told like 5 and 6 will be part 3, but 4A took a little longer time and we couldn't finish. So in the next video, I will share solution to question number 4B followed by 5 and 6. Let's see if it will all fit in. We'll do in one video. If not, we'll do it in 4 and 5. Got that, guys? That's it. I hope you all really understood what we just discussed with regard to NPO. Please do try and solve this question on your own. We have done this question in the class as well, this BRS related question. You guys can try solving this once at your home as well. If you have any doubt, you can definitely reach out to me. I'll be definitely more than happy to explain it to you in detail. That's it, guys. We'll see you in the next one. Remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun, it's all good. The day you guys either stop learning something new or stop having fun, trust me, you might start struggling because you might be in a battle. So the thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question to all of you. Are we in the game? I hope the answer is yes, we are in the game. See you all in the next session. Till then, tata, bye, take care and get lost. Bye guys.